see them, and it's not that far-fetched. Okay, we're ready for the next entry. Read to us.
Paid $900 in cash for current month rent.
We paid $900 cash for the current months of rent. What accounts do you think are involved, Ashish?
Cash and rent expense.
That's right, cash and rent expense. Now, it just so happens that Mike knows a lot because he had by instinct did something up there. I don't care if debits or credits come first. You know, accounting teachers get obsessed with that. It doesn't matter when we're first
I always
learning.
thought that. The
Debits do come first.
first.
But the reason why it's not important because it wouldn't make it wrong if it didn't.
Right.
Follow me?
Just
All right, question. Ashish, is expenses increasing or decreasing?
Expenses increase on the left side.
In this case, is it increasing or decreasing?
Expenses increase.
That's right, it's a verb, it's always increasing. Debit or credit?
Debit.
Correct answer, debit for how much? 900, Mike, do it for us. So he debits rent expense 900, and is cash increasing or decreasing?
Decreasing.
Debit or credit?
Credit.
Correct answer, journal post. That's how we think. We think each account individually. A lot of people will make the mistake to, well, I have a debit, so I must need a credit. Don't think like that or you'll fail the course. Post from top to bottom, so go to rent expense first. Why do we post from top to bottom? Because so we don't forget, and then it doesn't balance. So on top of that T account, write rent. See the
It's on
expense?
the income statement, correct?
It goes to
It's
the
not
income.
on the.
No, it's the income statement item. Revenues minus expenses equals net income.
So.
You can make a new T account, or that's cool. You make a new T account. Okay, might give us some space so with the okay. Put your plus minus. Whenever you're with Mike, you always put your plus minus in the T accounts. Okay? Yes, I still do it. I have to do it, or else I forget. Just kidding. But I still do it to keep me in sync. He posts up entry 5. Now post the cash. Mike has a good handle on it up there. So he's a really, and I can work the camera easier this way. Okay, entry 6. He journal posted. Read to us, Jigna. Read to us. Mike,
Paid $300 cash on account for office supplies purchased in transaction B.
Now wait a second. Oh yeah. Now wait a second. Something's wrong with transaction what? Transaction, the second transaction?
It says the paid $300 cash on account for office supply purchase in transaction B.
Well, then there must be a mistake up there. Go back to entry 2. It must be an error up there.
So the entry,
read entry 2 again to
us. Entry 2 said that it's a purchase $375 of office supply on credit.
Oh, so we didn't pay cash.
We didn't supposed to make the entry, right?
We're supposed to make the entry, but not the cash. What account will it be, Mike?
Accounts payable.
Accounts payable.
Accounts payable.
Is accounts payable increasing or decreasing?
Accounts payable is decrease.
Jigna?
Increase.
It's increasing. Therefore, it's a what? Debit or credit? All right, Mike. Okay, good. Okay, post. Okay, so now post up to equipment. He did. He already has the equipment. Now he's got to do is make another T account for account payable.
We have one here.
We'll make another one. Why? Because in the real world, if Mike's the owner of the company, he's going to tell Mary, his bookkeeper, I need to know, you know, I owe this guy, that guy, this guy. You know, you owe Verizon, you owe this one, you want to keep them separate. True?
So true.
So we make a separate T. We make a separate T account. Okay? Well, in this case, we have to pay. So post it up to our T account, which is the $375. That was entry 2. So we had to fix entry 2. And now we're going to entry 6. So read entry 6 now, Jigna.
Paid $300 cash on account for office supply purchase in transaction B.
Okay, so what accounts are involved, do you think, Ashish?
Cash and
rhymes with
office expense.
All right.
Supply expense. Office supply expense.
Now, okay. Nope. Expense means to use. We didn't use it. I don't know if we used it or not. We'll find out later, but we're paying them. The reason we're paying them is because we owe them money. So the accounts involved are account payable. You see the account payable up there? Yeah. See it? Where it says account payable supplies? How much do we owe them?
$300.
$375 we owe them. You see it up there?
We own that.
That's how much we owe them. But now we're going to pay them $300. Will that account increase or decrease?
Decrease.
Debit or credit, and how much?
$300
Debit or credit?
credit.
Nope.
I mean debit side.
On the left side, the minus side, you see it? So Mike makes the correct entry, he's excellent,
So
up
that's
there.
Accounts payable.
And I could get Mary on this film one of these days, a steady friend of mine that's been coming to our program for a long time, and we want you to come to njcampus.com, either live or by modern technology. Okay, so that's been Mike posts it to the account. He goes to the account payable, and where is it? In the second piece of paper. He posts that. Then he goes over to cash.
We have another.
He posts cash. Next.
Receive a bill for $500 for advertising for the current month.
We received a bill. I wonder why we received a bill. Oh, for advertising. So what accounts do you think are involved?
Advertising and bills means accounts payable.
Okay. Now, there's actually no account called advertising expense. Advertising will get an X on your paper. Advertising expense. Okay.
So the entry was you paid?
We didn't pay him. It's on account. Is it on account or cash?
It says receive a bill for
Received a
Bill.
bill. So by inference, we didn't pay him yet because we received a bill. So what do you think, Mike?
We received the bill,
Because we put some stuff on the TV station.
so we're gonna have to do a accounts payable advertising. Is that what it is for, advertising?
That's right. But Mike, you want to do the entry first? What do you think? It is advertising. We'll use that T account I made originally, perhaps. Advertising. Nope, it's not account payable there. It is advertising. Write down advertising. There's an account payable. Okay. All right, that's cool. And what's the other account?
cash.
No, you didn't pay.
I mean, it's not the.
All right, that's good.
Advertising expense.
Okay, he's working it. Okay, I can deal with that. Okay, expense. Now here's the question. You can breathe. You have to abbreviate a little. May have to abbreviate a little bit, perhaps. The problem with a cheap camera, sideways, it doesn't get as good of a film. This is like a $300 camera. When you pay $1,000, it gets sideways better. But we'll have to deal with it. The lesson is better though, so it doesn't matter what their equipment costs. The lesson's not going to be as good. Now, like I said, I didn't care that expense was on the bottom. Is expense increasing or decreasing? Jigna. Is advertising expense increasing or decreasing, Jigna?
Expenses. Debit side increase.
It's increasing because it's a verb. Debit, she says debit, she's right. How much?
$500.
$500.
So we're gonna debit advertising expense $500.
That's right. Is account payable increasing or decreasing, Mike?
Increasing.
Debit or credit?
Credit.
Correct answer. That's why it's a credit, not because I need one, because I have a debit, because it's increasing, that's why. That's entry number 7. And now Mike goes over to this is how we do it on paper too, when we're first learning. He goes to the expense first, since it's on the top.
All right, we're gonna use this
You
one.
can use that one, just write add on top to indicate, okay. And he puts in 500. Entry number 7, put a little 7 next to it in case it doesn't balance. And then he posts up to
Account, we have to
make a new T account for account payable. That's account payable for advertising. That the reason why we do that when we get a bill, we can quickly get the answer on a test, okay? So we have to look and say, well, what was this one for? Entry 7. And we'll be right back.